Something shifted in the financial basement on January 11th, and the world missed the signal. While everyone was staring at trade war headlines and red candles, Jerome Powell quietly admitted the truth. The Fed can no longer keep the valves closed. The expansion of bank reserves is now a necessity, not a choice. But here's the part that should make your hair stand up. Just 48 hours ago, news broke from the world's third largest economy. Japan has officially triggered the countdown to Q2 2026. They aren't just regulating XRP, they are reclassifying it as a full-fledged financial instrument. We are no longer talking about a crypto asset. We are talking about XRP becoming the same legal entity as a stock or a bond in the most bank-heavy jurisdiction on the planet. And in the middle of this convergence, Ripple just completed a $1 billion acquisition to capture a $12 trillion corporate treasury market. The pipes are being rebuilt, the liquidity is being primed, and the chosen one is about to become the world's most regulated bridge. Today, we decode the roadmap that puts XRP at the center of the 2026 liquidity flood. To understand the explosive potential of 2026, we must first understand the man who controls the global valves of money, Jerome Powell. In his most recent statements, the Fed chair dropped the mask of restriction and signaled a massive structural pivot. Powell isn't just talking about interest rates anymore, he's talking about the balance sheet. For years, we've heard about shrinking reserves, but Powell is now telegraphing a new reality. The Fed recognizes that reserves must start growing again to support an expanding banking system and a digital economy that is hungry for capital. Imagine the global financial system as a massive network of pipes. When the Fed shrinks reserves, it's like tightening every valve in the house. The flow slows down, pressure builds, and riskier assets get squeezed until they bleed. But Powell just told us that the tightening is reaching its limit. By signaling the expansion of reserves, he is essentially preparing to lubricate the entire global machine. This is where the connection to XRP becomes undeniable. Pure speculative assets often have to wait for actual rate cuts to see a move. But bridge assets, technology purpose-built for efficient value transfer, feel the benefits of liquidity the moment the valves start to open. Ripple's ecosystem has been laser-focused on this liquidity gap since day one. While other projects are fighting for attention, Ripple has been building the on-demand liquidity ODL rails that can settle massive values in seconds, bypassing the slow and expensive correspondent banking traps. And here's the kicker. Powell also pushed back hard against the idea that banks shouldn't serve digital asset clients. He stated that banks are fully capable of managing these risks. Think about that. The Fed is clearing the path for banks to hold and move digital value just as they are preparing to flood the system with fresh reserves. The on-chain data for the XRP ledger is already screaming this transition. We are seeing DEX volumes pushing fresh highs and capital rotation moving inward. This isn't retail FOMO. This is calculated positioning by market makers and custodians who know that when the flood comes, they need the fastest, most efficient rails to move that $43 trillion in global assets. Powell's roadmap is the macro catalyst we've been waiting for. The valves are opening, the lubrication is spreading, and the infrastructure is already scaled and waiting. We aren't just looking at a price pump. We are looking at the systemic integration of liquidity into the new digital standard. If Powell is the man who opens the valves, Japan is the architect building the new legal skyscraper. Over the last 24 hours, a bombshell report has sent shockwaves through the financial corridors of Tokyo. The Japanese Financial Services Agency, FSA, has officially set a target for the second quarter of 2026, their mission to formally reclassify XRP as a regulated financial product under the Financial Instruments and Exchange Act. Let's be very clear, this is not a minor guideline update. This is a fundamental structural shift. By bringing XRP into the same regulatory family as traditional stocks and bonds, Japan is removing the final barrier for the world's most conservative institutions. We are talking about established investor protections, mandatory disclosures, and licensed handling. But the most crucial part, direct balance sheet treatment. Once this reclassification goes live in 2026, Japanese banks and global financial giants operating there will no longer have to dance around gray areas. Holding XRP for treasury management or using it as a cross-border settlement rail becomes as straightforward as holding the yen or a treasury bond. Japan doesn't move on a whim. They prioritize stability and precision. This move is a strategic part of a larger plan to modernize international flows and position Japan as the global leader in regulated digital finance. Think about the timing. Powell's liquidity roadmap is expanding the reserves while Japan is providing the perfect regulated container for that liquidity to flow into. The markets are forward-looking. Smart money doesn't wait for the official effective date in Q2 2026. They start pricing in the implications now when the world's third-largest economy tells the world that XRP is a financial instrument. The security debate isn't just over, it's ancient history. We are seeing the birth of a global regulatory standard. Japan is creating the blueprint. And where Japan leads, the rest of the Asia-Pacific region and eventually the West will be forced to follow. This is the end of the Wild West and the beginning of the institutional era. Now we must address the elephant in the room, the current market volatility. I know it's tough to watch the red candles. I know the headlines about trade policy and geopolitical tension create fear. But as an analyst, I'm trained to distinguish between noise and signal. While retail investors are panic selling because Bitcoin tested the $90,000 level, the institutional signal has never been stronger. Look at the XRP ETFs. In the early weeks of 2026, we've seen over $137 billion in cumulative inflows into digital asset products. Specifically for XRP, we are seeing a streak of inflow only days. This means tokens are being pulled off exchanges and locked into institutional vaults at a record pace. This isn't a pump and dump. This is the supply shock being engineered in real time. Ripple's CEO Brad Garlinghouse recently went on record with a prediction that shocked the skeptics. He expects the entire sector to reach fresh all-time highs in 2026. Why? Because for the first time in history, we have regulatory clarity, Japan, institutional on-ramps, ETFs, and macro liquidity, the Fed, all peaking at the exact same moment. Some of the most respected analysts in this space are now setting a target of $8 per XRP as the baseline for this cycle. Think about the math. XRP has a fixed supply. Every transaction on the ledger burns a tiny amount of XRP. As the $43 trillion institutional network starts using these rails for atomic settlement, the velocity of money increases, the burn rate accelerates, and the available supply on exchanges evaporates. When a corporate treasury decides to allocate $1 billion to XRP reserves as we are seeing happen now, they aren't looking at the 24-hour chart. They are looking at the 2026 roadmap. The short-term dips are real and they are painful, but they are overwhelmingly noise. The signal is that the world's most powerful players are positioning themselves for a future where value moves as fast as information. They are buying the fear of the crowd to fund the certainty of the institutions. The question isn't whether the price will recover. The question is who will still be holding when the $800 target becomes the new floor. The pieces of the 2026 puzzle are finally clicking into place. From Powell's liquidity valves to Japan's legal standard, the stage is set for a transformation we have never seen before. In a market fueled by emotion and noise, we thrive on data and composure. Remember, haste leads to loss while calm analysis leads to victory. Thank you for your trust and thank you for being part of this rational community. Stay patient, stay rational, and as we always do, we don't wait for the future. We plan for it. Stay safe.